The Cheryll Leaps Framework, how I combine support and AMP, resistance with long-term options. For a long time, I watched traders talk about 10x option trades, fast breakouts, and once-in-a-lifetime moves. It always sounded exciting. It also sounded exhausting. The truth is, I do not want to trade like that. I don't want to predict CPI. I don't want to gamble on 0 DTE options. I don't want to stare at a 5-minute chart all day. What I want is something simple, repeatable, and aligned with how I naturally think. So I built my own framework. It is based on one of the oldest concepts in the market, support and resistance. But instead of using it for day trading, I apply it to leaps options, 6 to 12 months out, and I only act when the highest probability conditions line up. This is what I call my Cheryll Leaps framework. Step 1. If it's not on the weekly chart, it doesn't exist. I only care about major levels, not intraday noise, not random wicks. The 4 levels I focus on are previous all-time high, ATH, major weekly support, multi-month consolidation breakouts, large earnings gap levels. These are institutional levels. They represent areas where real money made decisions. For example, when the S&P Posher 500 reclaimed its previous all-time high after a long consolidation, that level became a launchpad. The same thing has happened historically with major leaders like Nvidia and Microsoft. When price reclaims a level that once acted as resistance, that old ceiling often becomes new support. Instead of chasing momentum randomly, I wait for price to return to these zones. Patience is the edge. Step 2. Level alone is not enough. It needs fuel. A technical level without a catalyst is just a line on a chart. The breakout needs energy. That fuel can come from CPI reaction, FOMC reaction, earnings beats AI, contract announcements, insider buying, macro liquidity shifts. The key is this: I do not predict the event. I wait for the reaction. For example, on CPI day, I am not trying to guess the inflation number. I wait. If the market reacts bullishly and holds a key support level, that confirmation becomes my signal. Reaction first, execution second. This one shift in mindset removes so much emotional stress. Step 3. Why I use leaps. Instead of short-term options, many traders use support and resistance for short-dated contracts. That can produce explosive returns, but it also requires precision and constant attention. That is not my personality. I prefer 6 to 12 months out, delta between 0.60 and 0.75. Time for the thesis to develop, less pressure from theta decay. Leaps give me breathing room. They allow macro themes, like AI infrastructure growth, to actually play out. For example, if Nvidia pulls back to a prior weekly breakout level and holds, and macro conditions remain supportive, I would look at a 9 to 12 month call with strong delta exposure rather than a weekly lottery ticket. Time becomes my ally instead of my enemy. Step 4. The entry checklist. Before entering any leap position, I ask myself, is this a major weekly level? Has price confirmed the reaction? Is there a catalyst or macro support? Is implied volatility reasonable? Am I risking no more than 5–10% of my portfolio? If at least 4 of these are not clearly satisfied, I do nothing. Doing nothing is a position. Step 5. Exit rules. Where discipline lives, support and resistance are not just for entries. They define risk. I reduce or exit when major weekly support breaks on a strong close. Important round numbers fail with momentum. My leap reaches 100–200% gain, and I can scale out responsibly. For example, if a stock breaks below a key multi-month support level and fails to reclaim it, that is information. I respect that information. Scaling out into strength and cutting when levels fail keeps capital intact. A A real example of how this might look. Let's imagine a scenario with Microsoft. If price pulls back to a prior weekly breakout level that once acted as resistance and now acts as support, and CPI reaction is bullish and AI spending remains strong, I might enter a 9-12-month call with delta around 0.70. I would size it at 7% of my portfolio. If the breakout confirms and trend continues, I could add. If support fails, I reduce exposure. This is structured, calm, repeatable. Why this fits me? I am not trying to become a day trader. I am building a long-term AI thesis portfolio, a repeatable leaps strategy, a disciplined process. I can refine over years. Support and resistance work best on higher timeframes. Leaps work best with patience. Macro awareness helps me avoid emotional decisions. When I combine all three, I feel grounded. The real edge. It is not a secret indicator. It is not predicting CPI. It is not chasing every breakout. The edge is internal, waiting for A-plus setups, respecting levels, controlling size, letting time work. The market will always offer opportunities. The hard part is waiting for the right one. I would rather catch a clean 100-150% structured leaps move over 6 months than gamble for a 10x trade in 1 week. Slow compounding builds real confidence.